Is owning a green certified building a smart move in today's property market? So a green certified building is essentially a property that's been officially recognized for meeting specific environmental and sustainability standards. So think of a seal of approval that says, this building is good for people, it's good for the planet, and is efficient to operate. It's really about the building's design. How has it been built? How is it being operated and maintained? Does the building prioritize energy efficiency, water conservation, and has it used sustainable materials? How is the indoor air quality? And does it have minimal environmental impact throughout its life cycle? So in Kenya, we have the Green Building Society of Kenya, which offers certifications aligned with global standards like LEED and EDGE. These certifications look at different aspects, from how much natural lighting the building uses to how well it handles waste and reduces carbon emissions. Green buildings definitely offer landlords short-term and long-term benefits. So if you're looking at cost efficiency, that's one of the biggest advantage. So if a building has good insulation, has good lighting, has smart energy, and has adopted mechanisms such as rainwater harvesting, you're looking at lower bills, which means that as a landlord, you're reducing your expenses and improving the overall building performance. So if you own a green building, it means that you're attracting more premium tenants, which is straight up advantage financially. Then there's a tenant demand. More and more tenants, especially corporates and multinationals, are actively looking for sustainable spaces. So green buildings attract quality tenants who are willing to pay a premium for healthier, eco-friendly environments. So from a revenue perspective, you're looking at higher rental yields and lower vacancy rates. Skipping green certification might seem like a cost-saving move upfront, but in the long run, it can be quite risky, especially in today's market. Buildings that don't keep up this trend risk becoming stranded assets. And what do I mean by this? Imagine your building struggling to rent out just because it is not considered sustainable enough. This means you have longer vacancies and potentially lower rental income. Policies set standards. So when governments put in place clear building codes and regulations that require energy efficiency, sustainable materials, and smart designs, it forces the entire construction and real estate sector to level up. Policies can also encourage incentives like giving tax breaks for green certified buildings, fast-tracking approvals, providing low-interest financing for sustainability-linked loans, and maybe even waiving some of these fees. All this can be efforts geared towards making green buildings more appealing upfront, especially for developers, which would make it easier for them to get started. There is also the regulatory risk. Kenya is now tightening environmental regulations to be in line with global climate commitments. We already have the Climate Change Act 2016, which is providing building codes that favor sustainable construction. We are also looking at operational efficiency. So if you're skipping certifications, then it means you're missing out on savings. So over time, landlords with uncertified buildings are spending more on utilities and repairs, which means it's more expensive to run a building that is not green certified than to have one certified. Then we're also looking at asset devaluations. Investors and banks are increasingly favoring green buildings because they hold value better and pose less risk. So it's not just about building green, but about managing those buildings. It's basically a shift from the basic maintenance to a more holistic approach. In summary, landlords, let's adopt green building certification to reduce costs and increase revenue. Policymakers, let's provide financial incentives that encourage developers to adopt green building standards.